Noah Rosenfarb is an amazing advisor when it comes to everything related to finance. If you want to know what to do with the money you're making from your business, if you want to know where to invest, what type of revenue and passive income you should be looking at into the future, if you're thinking about selling your business in the future, I am absolutely sure that you will enjoy this episode of the Business of Meeting podcast. Hello and welcome to a new episode of the Business of Meeting podcast. Today, I am extremely happy to speak with an old friend. In full transparency, we are together in the same forum in EO. But that's not the reason I brought Noah Rosenfarb today. Noah, he's a third-generation CPA, amazing investor, amazing entrepreneur. He's got this Freedom Family Office company, is a chief investment officer. He has had, like a cat, I suppose, many different lives. And we're going to focus today on finances and what to do as an entrepreneur in the meetings and event industry. Noah, thank you for taking the time.
Yeah, of course. Happy to be here, my friend.
That's awesome. And I'm glad the people listening are going to have a little bit of your knowledge that I'm exposed to on a regular basis. So I'm very excited for them. And especially now, with the whole situation, with a lot of people having lost their job and the financial constraint that goes with it, but also for entrepreneurs that are looking into the future, what's coming next. One thing that you always say is that if your income is down, you still need to do tax planning. So what do you mean by that?
Yeah, so for a lot of people that, they're used to making a certain level of income and they expect to return to a certain level of income, what happens in a year like 2020 when your income is down is that you may be able to sell some stocks that were appreciated and not pay any capital gains taxes. Or you may have a 401k plan or an IRA from an old employer, and there's a thing called a Roth conversion where you can realize some of that income now, pay tax on that income now, and never pay tax on that money again. So if you're in a low tax bracket, maybe you're in the 10 or 12% tax bracket for the first time in a long time, well, you can convert some of that IRA or sell some of those stocks, maybe even pay no capital gains tax on some of your stocks or pay very little in tax on your IRA rollovers. And it's something you could do now just to make the best of a bad situation. And that should benefit you as you move into the future. So there's some little tweaks that you should look at and be sure to discuss them with your accountant. Those two concepts of could you be in a 0% capital gains tax bracket? And is it worthwhile to take a look at converting some of your IRA or 401k to a Roth plan?
Well, that's, just what you just say right now. I'm discovering things that I never heard of before. How did you get into that? Because yes, you're third generation CPA. I would think that not necessarily all the CPAs are that knowledgeable with specifically those questions. But what is your journey to come today and running your own family office?
So I grew up with a dad who was a practicing accountant. I married a woman whose father's a practicing accountant. My grandfather's an accountant. And so, dealing with money's in my DNA. But my business has morphed over time. And really what I found is that not only am I passionate about making money, which is something that I've always loved to do since I'm a little kid, but then I also wanted to figure out how do I control the destiny for the dollars I'm creating. And if I focused on taxes, then I could take dollars that might otherwise, I keep 60 cents, the government gets 40 cents. Instead of that on a dollar, maybe I can keep 80 or 90 cents or 95 cents. And that became really attractive to me. And I've been able to redeploy that capital in hiring more people and growing our business and supporting our community. And, there's a lot of ways that I think entrepreneurs can allocate their own money in ways that benefit society, better than our governments can. So I really have been focused on helping entrepreneurs keep more of what they make. And I don't do it as a practicing accountant. I don't prepare anyone's tax returns. I found that that was not a business that suited my skill set. It's very competitive. Most people are focused on paying as little as they can. I work with really smart, successful entrepreneurs who can recognize a value when they see it. And they come to me, we provide them with advice and guidance on all the things that pertain to their financial life. And we get paid a lot of money to do it because it's worth it to them.
Right. But it didn't come overnight. So you started working as an accountant, but when exactly, can you trace when exactly in your life you decided, you know what, I'm going to go on my own. I'm going to own my own business, advising others.
So I started my first little business as a kid was when I was 9 years old. I was always involved in food businesses. I owned a restaurant while I was in college. And I never really wanted to be a restaurateur. I just like to eat. And it's
hold on. You owned a restaurant when you were in college?
Yeah, I had a pizzeria, an Italian restaurant. My brother was a pizza man and he wanted to own a pizzeria and he bought one about a half a mile from my college fraternity house. Okay. So I invested $5,000 to own 5%. And then I grew a fraternity and sorority catering business where we served 20,000 meals a semester. I sold to all of my peers and that were in colleges and in fraternities and sororities. I said, look, you got this cook that comes to the house every day. Half the time he's drunk. He doesn't show up. Just have us make your meals. We'll come by 3 meals a day, breakfast, lunch, and dinner. Anytime you want a pizza, it's only $5. We'll come deliver it to the house within a half hour. And so I sold 20,000 meals a year.
That's amazing.
Just through that plan. Yeah.
That's amazing. And then you sold that business?
Ended up closing it. Yeah. Interesting set of circumstances. My brother was ill. I had graduated college. I was no longer working at the restaurant. I started practicing as a CPA. And in a weird way, things kind of went full circle. The way we acquired the business was that the former tenant, their lease was up and the landlord wouldn't renew it. So the landlord took possession of the pizzeria, which at one point was doing about $700,000 a year in business. The landlord took it over and just kind of ran it until it wasn't making money. And we bought it when it wasn't making any money from the landlord. And then when we wanted to go sell the business, which at that point we were doing about $1 million a year in revenue, the landlord wouldn't approve a buyer. And so basically he forced us to turn the lease back over to him, and he ran the business and made the money until he, went bankrupt again and then found another buyer. So unfortunately we didn't have the foresight at the time to see that the landlord was a bit of a snake and it was going to bite us as well. So thankfully I made some money along the way, and it was a great learning experience owning a business while being a full-time student.
Oh, I'm sure that's what they say. Or you win or you learn, right?
Right.
So fast forward, you're working in the CPA firm, and then one day you're thinking, you know what, I'm going to do that on my own. How's that working?
Yeah, so I joined my dad's CPA firm. My dad had been in practice for 25 years, always independent, owned his own business. I joined him. They were doing about $2.5 million in revenue with a team of 12 people. So I was number 13 that came on, and I helped him scale that business to 70 people doing 15 million in revenue. And he wanted to sell. He wanted the highest price he could get. And I did not want to pay the highest price that I thought would be reasonable. And so I had encouraged him, and there was never any implied promise that by working for him and helping him grow the company that I would own something. So I don't hold anything against my father. He never misled me. But I realized I really don't want to own this business. And part of that was some experiences I had. Just, you got to bill your time in exchange for money. Mm-hmm. And so in order to make money, you've got to show up at work. And the entrepreneurs that I had counseled, a lot of them had these great lifestyles where they owned a business, but they didn't actually have to show up at work every day to turn the wheels to have the printing press go. Even from a young age, I kind of knew accounting would be a stepping stone to another opportunity. So I transitioned into the family office business after I was a partner at the accounting firm, after I'd helped my dad grow it, and I set him up to sell it to a top 20 accounting firm.
That's amazing. Absolutely amazing. And now you're saying, for people that are willing to sell their business one day when things are going back, especially in our industry, in the meetings and event industry, that's actually the moment, is to think about it now. And before you answer, I just want to share an experience with you. When I have people that I'm coaching, if they ask me, I want to sell, I say, okay, when? In 5 years? I say, what's your number? And they go, I don't know. And I'm thinking, well, if you want to sell in a certain number of years and you don't know your number, how do you know that the time is right? And you're saying, actually, not only that, you need to know what you want to be doing at what price, but the moment is now, when we're in the middle of the recession?
It really depends on your goals. So unfortunately, entrepreneurs get really tripped up in the process of selling their company, whether they end up selling it to their management team or giving it to someone in their family, through a transition plan, or maybe it's even finding a private equity firm or a strategic acquirer. Whatever the case may be, entrepreneurs often don't make the right decisions. And there's a Vistage study of 1,500 different CEOs that sold their company, entrepreneur founders, and 75% of them regretted their transaction. And it really had nothing to do with money. It all came down to the entrepreneurs not focusing on what are they going to do with themselves, and right. Too many entrepreneurs don't think about what's coming next in their life. They focus on the offer that they got, the price that they could get, the money that's going to go into their bank, and they don't think about, well, what am I going to do on Tuesday? I'm going to wake up. What am I doing? And it leads to regret and depression and divorce and a whole bunch of things that really could be avoided with proper planning.
75% regretted. That's amazing.
That's amazing. So there's a whole industry that has kind of been formed, a cottage industry, I guess is what they'd call it, over the last decade, which is referred to as exit planning. And for those of you that could see over my shoulder, I've got a book called Exit behind me that I wrote back in 2013. When I had learned about these really unfortunate consequences of entrepreneurs not planning, and I tried marketing the opportunity for entrepreneurs to plan in advance of their sale. And my business failed because when you ask an entrepreneur, when do you want to sell their company? They'll say in 5 years. You say, okay, well, do you want to start planning for that? They said, call me in 5 years. So, it was really, I was selling vitamins. And unfortunately, what I've learned over my entrepreneurial career is it's so much easier to sell medicine. So I got out of that business. And yes, I still counsel entrepreneurs that are being thoughtful about how they're going to approach the exit of their company. But I don't focus on it on the reason why people are going to get in touch with me and do business with me today.
Mm-hmm. Got it. Very clear. One of my cousin Daniel always share with me that we're not coming from old money, so the only resources we have is through the work we are having. And you said something very interesting to me some years ago about developing passive income stream, and not only necessarily getting all your revenue from your own company, from your own work. Can you elaborate on that?
Sure. So we have in our family office, we have something we call your income ratio. And what we're looking for is how much of your income do you have to get up and work for, and how much of your income comes in every month without you doing a thing. And that becomes an income ratio. And what we want to do is figure out, do you want that to be 50-50? Do you want all of your income to be active and none of it to be passive? Do you want all of it to be passive and none of it active? But we try and set a target for each year of where you want that income ratio to come out to. And what we find is that when we approach entrepreneurs with this concept, it kind of turns a light switch on, because for most of them, they've got all active income and no passive income. And they think at some point in the future, I'm going to flip a switch, I'm going to sell my business, and all of a sudden I'm going to go from 0 active income and 100% passive income. And it's really not the way it works.
So what are the different opportunities for somebody who's a business owner, an entrepreneur, to create additional revenue? Obviously, and you have to start somewhere. So you're making a certain amount with your work. Where do you start? What do you do? Is it real estate? Is it insurance product? Is it investment in other companies? What is your advice for somebody who would like to start having passive income in the next years?
Yes. It's all those things. So I just posted an article on Medium called The Best Investments for Entrepreneurs. And in it, I talk a little bit about all of those things that you just mentioned and when is really the time right to start investing, outside of yourself, outside of your business, which I think are always the two best investments for an entrepreneur. Start with yourself, start with your business. But once you get beyond that and you need to diversify a little bit, one of the great places to invest is in tax strategy. Again, it's not going to create passive income, but it might help you increase the percentage of income that you'll keep. So it's a way to increase your income. Another is through insurance products. So very low risk, low return products where your money's going to be safe and secure, but you'll get a return that's greater than it would be if it's in the bank account. And then we also want to look at, okay, well, real passive real estate investing is great, but if your business can own the property that it occupies, that's often a really great opportunity for an entrepreneur to get started building what is kind of a passive income stream because the business would be paying the rent to you as the landlord. So you're moving it a little bit from your left pocket to your right pocket. But in doing that, your business could always move out and go find another space if you grow too quickly and you replace yourself as a tenant. And now you've got that passive income. So that's a great tool. My family has been investing in apartment buildings for 20 years. So we now have a portfolio of about 4,000 units of apartment complex, apartment doors. And we built that slowly over time. I started with my wife and I, we bought our first 2-family house. We lived in half and we rented half back in the year 2000. And so just slowly over time, taking our equity and finding new properties, we've been able to grow our portfolio. And I highly encourage all entrepreneurs to see if that's an opportunity for them. And then you also mentioned investing in businesses. And that's something that once entrepreneurs achieve a certain level of success, other people can learn a lot from you.
Yeah.
And so what you may find is that by putting, $50,000 or $100,000 into someone else's company and dedicating a couple of hours a month to helping them succeed, you can get really good returns on your investments.
Yeah. And, it's like the Tim Ferriss approach, 4 hours per week. So I did something different. My wife is an absolute brilliant lawyer, and she's now in real estate here in South Florida. So invested in her. I bought the website. Eric is retiring in 2 years, and I'm waiting. No, in all seriousness, that's very good advice you're giving. But it's really, I think, a proactive approach that people should think, and not only focusing on their business, on the logistics of putting meetings and events together. And if I may add, in all seriousness, one additional thing that will have an impact on their revenue, it's actually, and we're going to talk about it now, but stop doing or start doing some of the stuff. And for me, when I was planning meeting outside of my base country in a different currency, I start going to the bank and I start learning a little bit about the option to basically cover the program. If you have a program outside of the US in 2 years and you have to pay a different amount in between, and then the currency is evolving versus the US dollar, whether it's going up or down, it's not your business to bet on the currency. Your business is to plan the meetings and run it, and to cover you and your client with the currency that is different. So that's something I start learning. But one of the things that you were telling me when we were preparing this is that you need to have this list of things that you're starting to do and this list that you're stopping to do, which is also something that I share with the people I'm coaching. And what is your stop doing list? But you go even further. Right. Not only is about that, you said you have to look at the time you're spending with people and make some adjustment there.
We adopt this concept of a lottery lifestyle. And what that means is if you went out and you bought a lottery ticket and you sat down and you started thinking, okay, what would change if we won? what's going to happen? We try and break those answers into just a couple of categories. What are the things you'd start doing and what are the things you'd stop doing? And who are the people you'd spend more time with? And who are the people you'd spend less time with? And once you develop that list, what you may realize is that you don't need to win the lottery to start moving in that direction. And so, your industry has really been impacted by COVID, more than almost anyone else.
Yeah, absolutely.
And it gives us the opportunity to go buy that lottery ticket and to go think about what would change if we won. And now is the first day that you could start living in that direction, because maybe the shackles that you had on you, those golden handcuffs, the momentum, everything that was the reasons that kept you in the industry, that kept you doing what you're doing, maybe they're gone. And, you and I both know Sri Kumar Rao, who says, is this good? Is this bad? Who knows?
Yes.
And so, maybe this devastation, of course, it's hard to ever wonder, could this not be bad? But maybe it is. And if we start with this concept of what are the things that we want to start doing, what are the things that we're stopping doing, who are the people we want to spend more time with, and who are the people we want to spend less time with? Is there a way to get closer to that vision without actually having more money?
Mm-hmm. And you made a very good point. It's just because of the situation. Again, good thing, bad thing, you never know. It's obviously a very bad thing when you're in the middle of it. And that forces you to think. And whether you want to, as you say, maybe look at something else. But I would also advise and speak with some of my fellow entrepreneurs in our industry. This is the moment to review your business model, because your business model is broken. And this is the moment, to your point, to put yourself in the shoes of what is my ideal in the future? What is my vision for the future? And what should I start doing and preparing myself for that in this industry? What would be the future, the balance between online, face-to-face? What would people be willing to do? And I'm also totally convinced that after we reopen everything, people are craving face-to-face. They want unique experiences. And that's also something to start planning today and get ready to deliver afterwards. Don't you think?
No doubt about it.
So in your view of what is I should be thinking about in the future, I have my own business. I'm planning for the future. I'm looking at what's going on. I might need to tap into my reserve to maintain my business afloat and also to make some investment. What is your advice there? What should I start with? What should I keep? And how much of my revenue or how much of my reserve should I invest in my business?
So those are great questions, which oftentimes, lead to very specific examples based on each individual's goals. So if I were to step back and just give people some general advice, if you've fallen on hard times and you're wondering, how much more can I stay here and hunker down? And one of the problems entrepreneurs consistently make is not looking at their alternatives. So when we're hunkered down, we're also not looking up. We tend to have our head down, either our heads in the sand or we're just protecting it, And so we're not looking up. We're not looking at what opportunities are around us. And we're also not looking at what optionality we have. And so one thing, just really basic, and it's terribly unfortunate to even talk about it, but if you haven't spoken with a bankruptcy lawyer to figure out if reorganizing your business is your best option, to have the courage to have the conversation. It doesn't mean you're going to do anything, but get the knowledge so that you can know what your options might be if reorganizing through our American bankruptcy system makes the most sense, or in the country where your business is located. That option, whatever you feel about our president, he's gone through bankruptcy for multiple businesses, and yet he's still able to succeed on some level, right? So if you're an American business owner, our system, one of the reasons capitalism in America is as strong as it is because we allow people to get a fresh start and start over and build another business again. So avail yourself of the remedies that exist, especially if you took a PPP loan, an EIDL loan, and now you're wondering, how am I ever going to pay this back? Well, find out what your options are. The second thing is, if your business is sustaining, if you're finding that there's opportunities for growth, now is a really good time to start looking around at your competitors. Who's wounded? Maybe you can coddle them and resuscitate them and bring them back to life and get a part of the ownership and the upside of that future. Mm-hmm. So, just because you've weathered the storm doesn't mean everyone else around you has. And you can pick up the pieces for them. And maybe, if you take 1 + 1 + 1, you're going to get a much larger sum than the sum of its parts. So take a look and see if there are deals that you could package together to take fragmented pieces and build something unique and new. And then if you're really crushing it for whatever reason, you made that pivot and it's working exceptionally well, I would say think about what is the future you want to create for yourself and your family and your employees and your stakeholders, and just make sure you've got a plan. We've probably came to this position through a reaction, working with your gut, your intuition, the opportunities you saw. And that is what, entrepreneurs thrive on. We love going with our gut. Yeah. But as we achieve that level of success, it's also important to start thinking out a little bit farther in advance. That old proverb of, someone who wanted shade planted the tree 100 years ago, right? So yes. Do what you can now to start preparing for that eventual future that you want to achieve.
Mm-hmm. And for those who don't know that quote, said that the best time to plant a tree to be in the shades was 100 years ago, and the second best time is now,
right,
for the future. Yeah, absolutely good advice. And I know that you have so much knowledge. We can speak for hours about that. But you have something that when I was discussing, what can you share with the audience afterwards? And you have those 23 overlooked tax strategies for entrepreneurs. So if you can maybe share 2 or 3 of them, and also more importantly, let people know how they can get those tax strategy from you.
Yeah, sure. It's right on my LinkedIn profile. My name, just Noah Rosenfarb. I'm the only one on LinkedIn out of 700 million people, I think. So if you type my name in the browser, you'll get to my LinkedIn profile.
And it's Rosenfarb with an S. Contrary to Rosenberg, there's some Rosenberg with an S. They're nice people, but they're better with the Z. But in Rosenfarb case, it's only with an S to get with Noah, right?
Right. And so I have these 23 overlooked tax strategies there. You could download it, print it out, review it with your accountant. But I would say that number 1 on the list is actually there for a reason. They're not in any specific order, but number 1 is there because it's the first thing I recommend to everyone, no matter how much money you earn. Get a second opinion on your taxes at least once every 3 years. And the reason is that, again, these are for U.S. taxes. The U.S. government allows you to amend, which means modify, your last 3 years of tax returns if you made a mistake. But if you made a mistake 4 years ago, it's too bad. And so one of Eric and my forum mates, I did him a favor. I looked at his tax return when he joined our forum, and I found a mistake. The mistake, he got back almost $250,000 from the government because of this mistake that his accountant made. And it only took me, about an hour to figure out. And that's a pretty good return on time. So make sure that at least once every 3 years, even if you love your accountant, even if it's your brother, your mother, your uncle, your best friend, get a second opinion, because the tax law is enormous and no one knows everything. So go down the street, find someone else, and see if they have any advice for you.
That's a very good point. And now that you're mentioning this firm mate, I think we should go back to him and give him the idea of paying for our next 10 years retreat with all the savings he had. That's great. Can you share maybe 1 or 2 others of those tax strategies for entrepreneurs?
Yeah, one of the things also, again, for more of the entrepreneurs that are achieving a certain level of income and success, one of the things that they often don't realize is that banks will lend them money to buy life insurance. And so it's like a concept that seems so odd, but the same reasons that banks will lend us money to go buy investment real estate is a similar reason to why the banks will lend us money for life insurance. And that reason is they think we could pay them back because if we die, the life insurance will pay them. They think if we live and something goes wrong, there's still a reason that they're going to get their money. And that's based in how we design the policy. So the banks really have kind of nothing to lose. And if you use the bank's money to buy life insurance and the performance of your investment in life insurance is greater than the cost of the debt, then you have what's called positive leverage. And so in my family, we've bought life insurance using the bank's money, and it creates more after-tax income that we can enjoy in retirement. Kind of going back to one of your earlier questions around how do we create passive income? One of my future passive income streams will come from life insurance. So, and that life insurance was paid 75% by the bank and 25% by me. So it's a tax strategy because life insurance is one of the only assets where if you put $1 in today and you die tomorrow and your beneficiaries get $1 million, there's no tax. There's no income tax on that gain. And that's very unique. The other thing about life insurance that's unique is if I put $200,000 into my life insurance policy over 20 years at $10,000 a year, and then I start taking out $10,000 a year, if you properly structure it, there's also no tax on the $10,000 a year that you take out. So it's a unique asset, and I think it's underutilized by entrepreneurs. And my own philosophy is that all life insurance is sold. Nobody goes around looking to buy life insurance. And the people that sell life insurance get paid a commission by the insurance carrier when somebody buys their product. And so that really creates this incredible conflict of interest between the person that's advising you to buy the insurance and you as the buyer, because you're saying, wait a minute, if I do this, this guy's going to make a ton of money. Is he doing it for me or is he doing it for him? And unfortunately, a lot of people throw the baby out with the bathwater and they don't evaluate the incredibly great opportunities that insurance can provide.
That's absolutely fascinating. Coming from a socialist country in Belgium where to pay an employee 100, I had to pay 252 to the state. And hearing what you're saying, and it's really inspiring and exciting. And before asking you the last question, because we can speak hours and I have so many questions, I'm sure everybody's listening is the same. One thing that I'm really advising those who are starting their company, and so we're not talking about you've already created some wealth and you're wondering what to do with it, but you're starting a business. The first thing I'm telling them to do is go and find 2 different CPAs and sit down with them and ask them what they can be doing with the business, what is the right structure for them, what type of costs and expenses they can put on the business, what are the frequency and the KPIs they're going to have to measure so that they get help to run their business and can focus on what they do best. And then they come to people like you who are definitely amazing and helping basically protect all the work that you've been achieving. So Noah,
I had a friend that told me about an interview. They were told to interview 3 CPAs. Okay. This was back when I was a practicing accountant. So he said, the first CPA, his name was John. He came in, he asked him the same question he asked all of us. What's 2 + 2? And John said 4. So, okay, John left. Then Peter came in and he said, Peter, what's 2 + 2? He says 4.0. And then when I came in, he said, Noah, what's 2 + 2? And I said, well, what do you want it to be? And that's how I got the job.
Well, you trapped me in that because I like jokes. So before asking you the last question, there is this young CPA working. Noah is coming to work for an older CPA, and every morning the older CPA has a little key, open the drawer and close the drawer. And Noah is very curious. He wants to know. And one day the older CPA retires. So Noah's got the keys the first morning. So he's getting in the office. He runs to the desk. He put the keys in the drawer and open it. And there's a paper that says, debit on left, credit on right. So my friend, my last question, I know we're going to see each other regularly and certainly we won't have to wait a year. And as you know, Jason Gaignard from the MMT community has a wonderful question that I love asking people. With all the times we're going to meet, but we meet in 1 year, what are we going to be celebrating with a bottle of champagne?
Well, let's hope we're celebrating the end of this COVID situation.
Yes.
But on a personal level, I think, from a business perspective, I'm taking a company public. It's really exciting and rewarding, and I'd love to see us achieve, a higher stock price every quarter. That'll be very exciting and rewarding. I also buy a lot of real estate, as we mentioned, and I think we're going to add another, 1,000 doors of multifamily units to our portfolio this year. And then I've got a family office business, Freedom Family Office, where we work with entrepreneurs that have achieved a pretty high level of success. And I'd love to be able to double the number of families that we're serving. So we've reopened our family office to new families. We built our team and we're ready to scale. And so I'm hoping we'll be doubling in size over this next 12 months.
I have no doubt. Thank you again for coming on the show, for sharing your knowledge. And I look forward to seeing you soon.
Always, my friend. Thank you, Eric.
Thank you. Thank you, Noah Rosenfarb, for all those great advices. Obviously, first, you need to make money with your business. And then there's so many opportunities. I personally like the idea of passive income and still doing what you're doing, but also generate different revenues from all your work and making sure that it's invested in other businesses. I look forward to exchanging with you in the Facebook group, www.evenbusinessformula.com/group if you want to join us, and feel free to connect with me on LinkedIn. Thank you.